Home insurance is something most people pay for every year without really understanding what it covers until they actually need it. I've seen this from both sides as a homeowner with my own policy and as a licensed agent. So this is the 5-minute essentials. I'm not here to tell you how much to buy. I'm here to show you the map using my own policy as a guide. We'll get you just enough to be dangerous so you can be a savvy shopper and plug the leaks in your budget. Now, quick heads up, I'm covering the universal basics. Standard policies usually exclude things like floods, earthquakes, and in some areas, you even need a separate specific wind and hail policy, depending on your zip code. So use this to master the foundation, then talk to your agent about those sidecar policies and specific add-ons like water backup. So let's start with coverage A. This is the big one, the house itself. This is based on rebuild cost, not market value. It doesn't matter what you paid for the house or what you could sell it for today, or even what it's appraised at. This is strictly how much does it cost in today's labor and materials to build this from a total loss. If you're insured for $300,000, but the house only appraises for $200,000, don't panic. You're insuring the bricks and the sticks, not the real estate market. Your coverage B is your other structures. Coverage B covers things not attached to the house. Think your fences, sheds, or detached garages. It usually defaults to a percentage of coverage A. And pro tip here, if you connect a garage to your house with a covered walkway or breezeway, it usually becomes part of coverage A. So that's not necessarily good or bad, but it changes how the math works on your policy. So it's just something to keep in mind before you start that DIY project. Coverage C is your stuff, your furniture, clothes, electronics. A quick way to visualize this is imagine picking your house up and turning it upside down and shaking it. Everything that falls out is coverage C. Most policies cover this anywhere in the world, not just inside your house. If your laptop is stolen out of your car, it's usually a home insurance claim, not an auto claim. Coverage D is loss of use. If your home becomes uninhabitable due to a covered loss, this covers your hotel or temporary housing while it's being repaired or rebuilt. It's one of the least expensive coverages on your policy and worth understanding when you're reviewing your limits. Now, the protection side. Your liability covers you if someone gets hurt on your property and sues you. Increasing your liability limits is typically very cheap. On my own policy, for example, it cost me about $16 a year to jump from $300,000 to $500,000 in liability coverage. So that's the price of a couple of coffees for a massive amount of peace of mind. Now, your medical payments is for the smaller no-fault bucket. It handles the quick doctor visit for a guest injured on the property without anyone needing to file a lawsuit. Finally, your deductibles. This part trips many up. It's often a percentage of coverage A. If your home is insured for $400,000 and you have a 2% deductible, for example, you're responsible for the first $8,000 of any claim. So before you call your agent to file a claim for a $5,000 repair, check that deductible. If the damage is less than your out-of-pocket cost, filing that claim could actually result in a higher premium later with $0 in your pocket today. So why spend 5 minutes learning this? Not because insurance is exciting, but because knowledge is power. And in finance, power is currency. If this understanding helps you be a savvier shopper or avoid a mistake or choose a better policy that saves you even $100 a year, that money belongs to you. Put it in an ETF, an emergency fund, or a vacation. You decide. That knowledge gives you the choice.